So buying gold just got a lot harder. How you doing, everybody? Welcome to Empire Precious Metals. Thanks so much for watching. If you came across this video, it's probably either because you were subscribed to the channel or you're watching all of the news that's unfolding with gold smashing all-time highs. As I record this video, gold sits at $3,314 an ounce. Crazy. A lot of people, if you ask them, I don't know, just months and months ago, if they thought that gold would be at this number that it is today, they would have said you were crazy. But here we are. And there's a lot of factors at play that's causing this, which I'm going to get into in just a little bit. But what I wanted to talk about is the fact that buying gold, being that it's priced at where it is right now, $3,314 an ounce, it is starting to become harder and harder for people to buy gold, just to store it and to have it as a safe haven asset. And for collectors like myself, this actually was a rude awakening yesterday. I'm holding up these coins. I'm going to show you just in a second here. This is the Spanish gold doubloons series. And these coins, these were released, as you can see here, this is 2021, the reverse proof links. Then we've got the reverse proof, out of order here, the bull. Let's get that into focus there, 2022. Then we've got we got the stallion. And then we've got the gold eagle, which came out 2024. And I just got notification that the next in the series, in the Spanish gold doubloon series, is going to be the bear, which is set to release in June. But now, as I record this video, we are sitting in April, so we've got May, and then whenever in June that they decide to strike these coins. So we've got another 2 months, I would say, before they actually strike these coins. And gold can still go up by another $100 or even $200 an ounce, depending on the situation. Now, while gold can fluctuate on a daily basis, what happens when you're buying gold coins, such as the ones that I showed you, spot will lock in on a certain price. And then the mint, they will then have their premium marked up on that coin to the supplier. And then the supplier, they are going to have their markup on it to dealers such as myself and the online retailers that maybe a lot of you buy from. And then they're going to mark it up to the general public, to the retail customer. So without getting into specifics, when I look at the spot price right now at $3,314, I'm going to just do a little math here, $3,314, and I'm going to multiply, I'm just going to say 10% markup from the supplier. It's actually a little bit more, but I'm going to do 1.10. So we're looking at a cost just to me as the dealer at $3,645 just to acquire that coin. And then obviously I'm going to have to resell that coin to the retail customer. I'm going to mark it up by a couple percentage points. So by the time it gets into the hands of the retail customer, we're going to be talking around $3,700, $3,750 if it is today. Now, hopefully the prices come down before we get to that point in June. But recently there have been a lot of analysts and banks that have been coming out with reports saying that they're calling for higher gold by the end of the year. In fact, Goldman Sachs just updated their price target at $3,700 an ounce. I saw some things at $4,000 an ounce. I mean, you search the web and you're going to find a lot of these big investment banks all over the place. But let's just talk about some of the main reasons here. Now, I don't have these memorized. I'm going to actually read these off to you guys. I did do a little run through ChatGPT. It did pull up a whole bunch of links that I'm going to post in the description below, so that way you guys can dig a little bit further. But right now, so what are we talking? April 16th, gold is past $3,300 an ounce, reaching an intraday high of $3,318, a historic milestone. So 5 main reasons as to why this is happening, and this isn't a surprise to many of you. It's the escalating trade tensions with China. So just to summarize what ChatGPT is saying here, the intensifying trade conflict between the U.S. and China has prompted investors to seek safe haven assets like gold. We already knew this. Recent developments include the U.S. imposing new tariffs on critical mineral imports and restricting AI chip exports to China, leading to a significant financial repercussions from companies like Nvidia. In retaliation, China has increased tariffs on U.S. goods and suspended Boeing jet deliveries. These actions have heightened economic uncertainty and fueled demand for gold. Okay, so you have this tremendous amount of disruption in the supply chain for gold, as well as the manufacturing and how we have been doing business with China for many, many years. And so as long as this continues to happen, we are going to see the price of gold continue to rise. The other aspect, and again, this is not a surprise to many of you, especially within the stacking community. We've known this for a long time, and it's the weakening of the US dollar. The US dollar actually declined to its lowest level since April of 2022. So we're talking 3 years now. We're at our lowest levels, making gold more attractive to investors holding other currencies. The depreciation is attributed to concerns over U.S. economic policies and potential for a recession. So again, recession fears, that's going to cause the price of gold to go up. So we've got now the trade tensions, which is causing a major issue. And we also have the weakening of the U.S. dollar. Third aspect as to why gold prices are where they are and continue to climb is that there's a shift away from U.S. treasuries. So investors are increasingly moving away from U.S. government bonds, traditionally seen as safe assets due to rising yields and concerns over fiscal stability. Again, it's the whole stability factor that's causing this turmoil. This shift has led to increased demand for gold as an alternative store of value. Now, the weird thing that happened, I would say about a week and a half ago, when President Trump in the United States decided to impose the tariffs, we saw a decline in the markets across the board, but it was like all assets, which was a little peculiar. So we saw a huge drop in the Dow Jones Industrial Average. We saw the S&P take a hit. We saw the NASDAQ take a hit. We saw cryptocurrencies drop. And the most surprising thing was that we saw gold and silver take tremendous drops. It was crazy. Gold was about 3,200 and change, and we saw it dip just below $3,000 an ounce. At one point, it was like at 2,980, 985. But now gold is sitting back above the $3,000 mark. Crazy. Two more aspects as to why gold is doing what it's doing. Central bank purchases and Chinese demand. Okay, so we also know that a lot of central banks across the world have been stockpiling gold. Central banks, particularly China's, have been accumulating gold reserves at an accelerated pace. China has increased its gold holdings to 8% of its reserves, importing approximately 700 metric tons over the past 2 years. This trend reflects a strategic move to diversify away from dollar-denominated assets amid geopolitical tensions. So now we see the banks hoarding the gold, and right now, especially China's central bank, we have seen this going on for years. A lot of YouTubers within the stacking community have reported on this. There's some infographics out there where you could see the total gold holdings from each country, and it compared each country to each other, and the United States had a gigantic stockpile. I think Salivate Metal had posted a video like that not too long ago. In fact, I'll reach out to him and tell him to post another one. Guys, definitely check him out. But so we're now seeing central banks hoarding this safe haven asset. And then the fifth reason as to why gold is becoming more and more expensive each and every day, anticipated Fed rate cuts. All right, so market expectations of significant interest rate cuts by the Federal Reserve, potentially up to 100 basis points in 2025, are bolstering gold's appeal. Lower interest rates reduce the opportunity cost of holding non-yielding assets like gold, making it more attractive during periods of economic uncertainty. So essentially, what you guys are seeing across the board is economic uncertainty is what's fueling this demand for gold. So now, what does that mean for you, the everyday average stacker? Well, even in my situation, as a precious metals dealer, where I am able to access 1 ounce gold coins at a wholesale price, it's becoming increasingly difficult for me to stack 1 ounce gold pieces. In fact, for that particular series that I just showed you, the Spanish doubloon series, that 5th coin that's coming out, that's the last in the series, thank God, because if the price continued to climb, I don't know if I'd be able to continue that that series collection. So what can you do? You can drop down to smaller weights, obviously, half ounce, quarter ounce, 10th ounce. And now we're even seeing 1 gram gold bars becoming more common. You can get into foreign gold, but I highly recommend that you are a little bit cautious with the foreign gold because depending on where you are, certain foreign gold coins are not going to sell as well on the secondary market. So if you're in the United States, you might want to double think or rethink your strategy of buying some foreign gold, unless you know that when you go to sell it, you're going to get a lot less of a premium than you would if you were to be selling an American gold coin like a Buffalo or an Eagle. If you are, and again, I'm talking to the United States, the Americans here who are watching this video, if you are looking to buy some gold, foreign gold, most common gold coins I would say would actually happen to be the gold Britannias from Canada, from the UK, gold Maple Leafs from Canada, Krugerrands from South Africa. Krugerrands, they tend to be essentially like the cheapest gold bullion coin that you can buy here in the States. And then also you got Mexican gold. Mexican gold has a very, very high allure to it. There's a lot of people that collect it. They buy it. They love it. So you can possibly get some Mexican gold at cheaper prices. And plus, these gold coins are fractional. When I'm talking about the Mexican gold, like the 2 pesos, this coin is like about the half the size of a dime. It's about 1/20th of an ounce of gold. Then you've got the 2.5 pesos, the 5 pesos, the 10 pesos, 20 pesos, which is 20, which is close to like a half ounce of gold. And then you got the 50 pesos, the 50 pesos. That coin is a hefty coin. It's like 1.2 and change. That's going to cost you a lot of money. So if you are unable to stack the 1 ounce gold coins, I would say possibly drop down to the quarter ounce. If that's a stretch, drop down to the 10th ounce. Going forward, for myself personally, I most likely will be stacking quarter ounce and 10th ounce coins. This is essentially what we're dealing with, folks. It's the 1 ounce coins are starting to get too pricey for your everyday person, and so you're gonna have to make some adjustments. So again, some of the stuff not a big surprise to many of you who are in the stacking community and you have been following what's going on in the news with gold and silver. Guys, I'm curious down below in the comments as to what size gold are you stacking now, being that things are getting to be more expensive. And going forward, are you going to continue to stack gold? Are you going to scale back? Are you going to switch entirely to a different metal like silver? Let me know, and I'll see you guys on the next one.